Alright everybody, welcome to today's video, narrative building part 2. Okay, so um, today we will be looking at recent price action in NQ, starting at yesterday, I believe around Asia session, going towards the end of day today. We'll look at reading price action and kind of narrating where we think price is heading. We seek to answer the question of where is price reaching for and how is it going to get there, right? Or another way to ask it is where did price come from and where is it reaching for? Okay, in my previous video, I did mention a number of tools that we use to help build our narrative, to put together pieces or events to narrate our story and where we think future price action is likely to go. So we'll be looking at a number of things. We'll be looking at structure, we'll be looking at zones, and we'll be looking at order flow. All right, so how does market maker move the market? It reaches for internal range liquidity in order to fill inefficiencies or to rebalance inventory, and then it reaches for external liquidity in the form of old highs or old lows. So it makes various swings back and forth until it reaches its objective, right? Part of our narrative is also objective based, right? So we look at higher time frame to guide lower time frame delivery, right? And we look for price to reach higher time frame objectives, and then looking for to see what price is going to do next. Okay, so starting off, we're looking at higher time frame. We have a 4-hour chart here in front of us, and we are seeing that price is and has been quite bullish for quite some time, right? Looking at this last leg here, we have this S&D area here, which was the um, last area where we had a valid high and a valid low put in on a higher time frame. We left it in a hurry, right? Creating this large leg up with very little swing points, right? And for reference, a swing point is where we have a valid high and a valid low. A valid high is where you have a bullish candle. Last bullish candle close with a body closure below it would create a valid high, right? So you have um, this candle here. These candles didn't close above it, so we use this candle for validation. And you have a candle close with a body closure below. Here, there's no valid high, right? The validation candle is this one, and we never got a body close below it, so there's no valid high here. Same with this one, we have this large candle up with no closure below it, so there's no valid high here, right? And there's no valid high or valid low until we get to this point where we have a valid high and then a valid low, right? Here we have a valid high and valid low. So, and then we have a larger swing area here, which is a valid high on a higher time frame and a valid low, resulting in this larger zone. And when we refine it a bit further, we do have these S&DRs responsible for significant moves up, right? So as we're making this larger leg up, right, there's no swing points until we get to this one. And when we have a swing point like this, where we make a new high afterwards, right, this actually becomes a protected low, right? So if price is going to continue higher and follow market structure, you would expect this low to hold in order to maintain structure, right? It can wick below it, but you would need a body closure above it and then a reaction to break this high in order for structure to remain intact and for us to continue, with our bullish price action, right? But we do see here that price did flip, right? We broke below this protected low with quite a lot of velocity, right? Breaking structure to the downside, and just based on market structure alone, there is a high likelihood that we're starting a new trend down, especially after we're seeing reactions, putting in a lower high, right? So breaking structure and then creating a lower high rather than a higher high is what is the beginnings of a new downtrend, right? Looking at objective based, we know that higher time frame frames lower time frame delivery, right? So you have lower time frame flipping to reach towards higher time frame objectives, right? So what are some higher time frame objectives, right? So I have a couple examples here marked off, right? So, even going back quite far, right? So we have here SNDRs, right? Especially important SNDRs I mentioned in one of my first videos. They do act as draws on liquidity, where price comes back in because there are leftover over orders that have not been filled in order to refill their bags or fill up inefficiencies or rebalance their inventory in order for price to continue up higher. So we have this zone, we have an SNDR responsible for the break, right? We create these zones on top of the large zone, which often get liquidated or often become inducement to tap back into the zone, right? So you have sell stops here. So you have buying into the zone in order to send it up higher, right? Here we have another large zone here with the SNDR. The same thing, right? Price leaves, price creates this inducement, taps back in to the SNDR, and then away we went, right? But the thing to note is that price came back and tapped into SNDR, right? Here's the same thing, right? So we have this very large zone, right? And this zone has multiple SNDRs, multiple points of interest, right? So you're always looking at the leg that sent price out of the zone, and you're examining where are the points of interest here. And there's a few, right? There's this one here. We got initial speed bump here, but often the zones at the top of the range, do get liquidated, especially if they're inducement or there's accumulation here before it taps back in, right? So it'll start accumulating and then it'll tap back in, taking that liquidity to go higher. So created this initial inducement on this S&D, came down to this S&DR. We saw a nice move up, right? Eventually to come back down, take out this liquidity below and tap it to this S&DR and tap back up, right? So each time these S&DRs acted like a draw on liquidity as higher time frame objectives, right? So price um, creates a zone, it leaves the zone, right? It tends to come back into the zone, right? And so we talk about that in order flow. So order flow is price leaves to take out external liquidity in the form of highs, and it needs to come back and rebalance its inefficiencies. So oftentimes with large and strong moves, it's leaving by inefficiencies, it's leaving behind orders, is leaving behind fair value gaps where there's inefficiencies in buying and selling. That price tends to need to come back down to rebalance most of the time, right? It doesn't have to rebalance every single time, and typically if it doesn't rebalance, it means that you're in a really strong trend. If you have inefficiencies and S&D zones that get mitigated on the way up, that tends to be a weaker trend and a low resistance run of liquidity. So when price turns or if price turns, it doesn't have any sort of support in those areas for price to continue going up. It usually tends to just have a sharp move down and take out all those liquidity. Rather, if you have these strong moves up, it it leaves these areas that price can continue higher off of, right? And if it fills our narrative, where if price is going higher, where is it going higher from? Right? It tends to, if it's going to go higher, it needs to come back and refill its bag. It needs to fill inefficiencies before it goes higher. And that's why market structure never goes up in a straight line. Market structure always goes, make a series of higher highs, higher lows, higher high, higher lows, higher high, higher lows. Because each time it's going up, it needs to come back to fill in efficiencies. It needs to rebalance, regain orders, find new buyers, new sellers at lower prices, and then go up again, and it starts that cycle. It never goes up in a straight line. It always, again, it always comes down, takes out internal range of liquidity before going after external range liquidity, right? So you do expect that. So after price takes out a high, right? This is why breakout trading tends to have a low win rate, right? I mean, unless you are using confluence of other factors and waiting for specific things like retest, being first in, first out. Different types of breakout traders. There are profitable strategy breakout traders, but typically if you look at any sort of breakout, there's always a retrace, right? So waiting for a retrace will give you better probability, and you actually expect that retrace, right? After you have a high taken, you expect a change in order flow to go back into the range, into a specific zones like SNDRs, or or other times, you expect there to be accumulation at the top of the range, and this is what the accumulation often looks like. It creates zones at the top of the range, right? Creates fake flips, right? Takes it out and then liquidates the zones at the top of the range into SNDRs before going higher. So this is often what happens. There's accumulation, or a change in order flow directly down, or in some cases, in an extremely bullish or strong trending move, it just goes up and up and up. And when it does do that, you know it's doing that, right? It's running liquidity and it's keeping on going without turning back, not giving you a chance to enter, right? And those are typically the three price expectations after reaching a high, right? So this is going to be part of your narrative. After reaching a high, you don't necessarily play for continuation or breakout right away. You wait for certain things to happen. You expect accumulation. You expect a change in order flow, so you can short, and wait for that long opportunity again, right? So we come back up here, and now we created this massive zone here, right? We left an SNDR, and like I mentioned, price is attracted to these SNDRs, right? It almost always goes back and mitigates it at some point. It always goes back and taps into it. If we're gonna go higher, right? Where are we going to go higher from, right? We need to often come down, take liquidity in order to go higher, right? And now this is a large move down, and if we get some weak economic data or whatever, some weakness in the market, this seems like a large move down, right? But this is where it would be attractive to buy, right? If you're a stock picker or adding to your retirement funds or whatnot. Like I haven't been buying and adding to my retirement for a little while because we were just too overextended, right? But price comes back down here, I'm going to be throwing money, into various stocks and indexes and things like that in my long-term portfolio because this is a great place to buy right after this extension. You expect price to come back into a significant area of interest to go higher, right? And so you see this is fractal, right? That was on a really high time frame, right? But if you look at the 15-minute, I mean, it's the same thing, right? You have these zones on the 15-minute, right? With SNDRs left behind. Once you leave the zone, you create these areas of liquidity as we're going up to be taken back, right? And then to create liquidity again to come back. And if we're going to go higher, where do we go higher from? And it's probably going to be in one of these zones where we're going to go higher, right? So the expectation likely is to head down, right? And we're starting to see that price is heading down as well, breaking structure to the downside, filling inefficiencies. You look for fair value gaps in this large move, created inducement, took the liquidity, and we saw a nice reaction down below. With the expectation, we have clear higher time frame objectives, right? Here, and potentially even down further into this one that's unmitigated. This one was mitigated here by this one, and ultimately again to our very high time objective, which was pretty far down below, right? So if it's gonna go all the way down to this area, that's gonna take a long time. That's gonna take days. We're not really looking for that. We're looking for a short term. I typically trade on the 15 seconds. So we're scalpers looking for short term. Capturing small parts of the market move, right? But I mean, I do think that on the long term, it's quite reasonable for us to start heading down into some of those higher time frame objectives. But we'll have to see, right? What price actually does do. As our narrative could be wrong. Price can do whatever it wants, and so we also have to wait for price to show its hand and start aligning with their narrative, right? So you have that narrative. Now when we zoom in a little bit more, I mean that's our higher time frame. We can look now on the lower time frame to see what price is doing and the order flow that it's moving in, and how price actually moves, and we can get an understanding and help us with a short-term directional bias. Right? So when you're looking for trades, you're taking trades based on the direction that you're expecting price to go in and where is it heading towards, and you're looking to capture part of that move. So you need to have an understanding of how to read price and to be able to, predict with a fairly high degree of certainty where price is going next. Right? So for me, we have a breaking structure to the downside, so potential break. So this is an argument in our favor that we're going to go down. We have clear targets down below, right? Where a structure and price is now showing that it's ready to head there, then that's where we can expect price to go, right? But I mean, it's not going to go there in a straight line, so we're going to go down to a smaller time frame and see how price can go, right? So on the 15-minute intermediate time frame, we had this big displacement down, right? Leaving a lot of the inefficiencies here, fair value gaps that need to be rebalanced before going down. And so price is not just going to go straight to objective, it's going to go down, and after price, reaches a higher time frame objective, like takes out external leverage liquidity, it often needs to come back and fill an efficiency, right? And a good place to look at that is generally the 50%, right? So ICT talks about premium discount, right? So you're looking for, market to come back to around a 50% range and looking for points of interest. So what you need to do is you examine the leg that brought it down, and you're looking for points of interest. And here, there really is such a strong move that these are all just fair value gaps or imbalances with, the move origin, right? So you're looking at 50%. Right here, you got a fake flip, and oftentimes, the first flip is fake, creating liquidity or inducement to be swept into an area of interest, so that smart money can unload their bags, right? So you have buy stops here, so people who are buying above here and they're selling here, so they're selling low and buying high, right? So smart money is buying here, taking these highs, right, and then where all their sell orders are, right? So retail is buying into big money selling, and they're rebalancing their inventory, right? So this, if price is gonna go down, where is it gonna go down from? And so it's gonna go down after they fill their finishes, after they fill their bags up in order to make a move down, right? Now price could keep going up higher than that, right? But we'd have to see if that's what price wants to do, right? So far price is rejecting nicely off of the fair value gap, and it created a 15-minute breaking structure, right? So now this is starting to align with their narrative. Now as it's going up, lower time frame price is heading up, and we know that lower time frame is going towards a higher time frame objectives. So we do expect that eventually that price will turn to head lower at some point, but we don't necessarily know when it's going to happen, right? But the key things to look for, that we know that it needs, is that it needs to fill inefficiencies, and often it needs to take liquidity before filling that inefficiency, right? It needs these buy stops into the area of interest, right, so that they can fill their bags. Otherwise, there's nobody really buying higher that they can sell to. So they need to create these inducements to do so, right? So oftentimes, was it ready to go here? I mean, as they hit the 50%, right? And so price could have just kept on going down from here, right? We didn't know for sure, but once we saw that there was no strong follow through, right, failed to make a new low here, then we know that this high is going to get taken, and if price kept on going, that would change our narrative completely. It means that there's some serious crazy buying pressure going on, and this was just coming down to tap into the zone. But that seems kind of unlikely, right? It seems like it needs to go down further, right? If price is going to go higher, is this all that it needed to do? No, it probably is going to go lower. Um, I mean, again, we have to see what price actually wants. It could be wrong, but it just seems more likely, right? So we have this liquidity taken into the fair value gap. We have this 15-minute flip, right? Let's see what happens. Right, we can even go down to look at the 1 minute. Right, looking at the 1 minute, again, price is fractal. So price is not just going down in a straight line. It's mitigating itself on the way down. It's rebalancing itself, right? It's going down, coming back to S&D, right? Then goes down, comes back to fair value gap to fill in efficiencies, takes out liquidity, does a sweep, comes down, right? Change in order flow up, right? Multiple swings up into where? Into fair value gap where the S&D is. And it heads down again, fills up inefficiencies, comes down, takes this low. Again, anytime you're taking a low, you're expecting, one of few things, right? You're expecting a change in order flow to head back up to fill in efficiency. You're expecting accumulation, or you're expecting a run, right? So in these cases, all of these cases, you get the change in order flow to come back up to fill in efficiency, to take out liquidity, then to go reach for external liquidity again, right? And then there's all these lows that are being taken, and then this is the higher time frame low that needs to be taken. That's like one of the final short-term targets, right? Once it takes the final short-term target, you see a change in order flow again, right? And even goes to take this high, right? So that looks like a flip to me, right? This is almost a flip, and oftentimes it can be a flip to take us back into the range to mitigate further. So this could be a higher time frame move, and now this is a lower time frame change in order flow to start mitigating somewhere up higher, right? And so where can it go? Where is the likely pace for it to go? If we're gonna head lower, where does it need to go first before it goes lower, right? It needs to come back and it needs to take liquidity. It needs to mitigate something, right? Before it goes lower. So right now we have our short-term flip indicating that we want to mitigate a bit higher, right? So first place, 50%. So we're quite close to the 50% mark actually. So right here, right? So price can come to the 50% mark and then come down. I mean, there is also, this would be a bit higher than I'd like, but you have some unmitigated zones here, some fair value gaps, some equal highs there. That could be a potential target. You have these highs here, right? So price is going to need to fill an efficiency that was left on this large move, and then if it's going to go head lower, that's where it's going to head lower from, right? Or if we see a change in order flow and we don't see it move up, that could mean that this is the objective already met, and we're just going to go higher, right? But the likelihood though is that we're going down, and that's what our current narrative is, and so that's what we want price to do. We want to see price align with the narrative. We want to see price go down and start going to our direction of our narrative towards our our higher time frame objective. If we start seeing price doing the opposite of our narrative, that's when we kind of sit on our hands and we need to reflect and see if maybe we missed something, or maybe our narrative was actually wrong, or price already reached this target that it needed to do. So let's see what price is doing now. Right here, we flipped here, we created this zone here. Right? Oftentimes these zones are at the top of the range are meant to be liquidated, but we'll see. But right now we have this liquidity down here below. If we're gonna go higher, where are we gonna go higher from? This would be a logical place where we would go higher, right? We have a zone here that's unmitigated. We have liquidity or inducement being created. We have a sweep of that into the zone, and this is the likelihood if price is going to go higher. This is where price is going to go higher from. There's not many. There's a little zone here, right? And then there's this void here, right? So typically, we'll have to see what price wants to do, right? I mean, price. I am expecting price to come all the way down to take this low towards a higher time objective at some point. But let's see. Right now, I mean, it doesn't look like it's. I mean, it might not be ready to do that yet. So let's see. All right. So tap into our zone. All right. Got a nice. Right. Ranging here, failing to make a new low. Okay, we got our flip higher. Took this high. Right. So if it's going higher, it's taking this high now. After taking that high, you get some accumulation. Right. We sweep it, and so far failing to make a new high, failing to make a new low. Okay, so we made a new low into the fair value gap near the SNDR. Okay, so this SNDR needs to hold. Okay, so this SNDR didn't hold, right? So that's potentially a bearish signal, right? So if we're gonna go higher, where we're gonna go higher from? We typically will go higher from the SNDR. The fact that we failed to see a strong reaction from the SCNDR, that typically means that the buying pressure is being depleted and potentially we're ready to head down now, right? So our structure is, we hit the 50% mark, we took liquidity, right now we're potentially heading up. Or, I mean, we have bullish structure right now still. It could be coming down to fill out some of this void. So it might not be ready to fully go down yet. Like this is higher time frame objective. So by the time higher time frame reaches objective, lower time frame can be doing a lot of things in between, right? So you have to be aware of that and give you some room, right? So here we go. We had a nice drop here, right? And let's see, right? So now it's giving us some hope. Okay. So right, so pretty bearish move down, pretty sharp move down. Came and mitigated for some of the fair value gaps, and it made a new low. However, it looks like it potential flip here, right? If it's gonna go lower, yeah, I can come back and take this liquidity and with fair value gap and go lower, right? But we'll see, right? This is like the middle of the range here, though, right? So this could also this could be one to two. This could be a fake flip, a fake flip to go lower, or this can actually be a flip to go higher to fully mitigate, to mitigate further, right? There's a S&D zone, S&D zone fair value gap. It can mitigate further. It can take this high as well, right? So this is a first flip fake. Maybe take out one more time, and then go down, right? Would be reasonable narrative, right? Strong push up. Okay, little reaction from the S&D. Some accumulation going on. No change in order flow yet. Okay, looks like there's some news or not 9:30 open or something. And here we go. So 9:30 volatility comes in. Whoa, and then a large move. So 9:30 comes in, it sweeps the highs, takes out all the liquidity, above the 50%, and then you have massive higher time frame move, massive selling pressure come in to align with their narrative, right? So you could have found a nice short there potentially. Right, so it took this low. After taking a significant low, what do we expect? Right, there's also a zone here and a fair value gap, right? So after we take a higher time frame low, what do we expect? We expect either a change in order flow to come back to mitigate what was left behind, or we create some inducement that gets some ranging, some accumulation, to be taken to continue down lower from there, or we get a run, right? So far here, it looks like we're got a nice bounce after taking out the low. Okay, we got a change in order flow, right? Change in order flow back, a little zone here, right? So that looked like it was enough. So again, it had a strong move down, came back up to rebalance or fill in efficiency, right? Did inducement first, took out these liquidity into a zone, right? And then you got immediate reaction down, a strong move down, right? So you could find, prices aligning with your narrative. You can find some sort of entry that meets your entry model to partake in some of this move, right? So you have your narrative, which is bearish. You have the location as to where price is likely to go and what price needs to likely do before it heads lower. So where is price reaching for, and where is it coming from? What does it need to do before it gets there? How does price actually move? And that's all going to be the story that the price is telling you, that you are reading and you are predicting ahead of time, and analyzing what is the likelihood for price to do and what does it need to do before it does it. So here we go. We got a strong reaction from the S&D zone, right? Came down and pretty quickly, as it came down, it filled the inefficiencies S&D zone, and it came down and took out this low. Right, so this could be one higher time frame move down, but after you take a low into a zone, what do you expect, right? Again, you expect a change in order flow back into the zone, fill in efficiency, or you expect accumulation, or you expect a run on liquidity, right? So that's part of your narrative, and let's see what happens. All right, nice reaction from the unmitigated S&D, which we expect, right? I mean, we don't expect this to necessarily hold. We do expect it to be a speed bump and to provide a reaction, where you can find a long here as well. You could have found a nice long scalp here. And now if it's gonna do this, where is it gonna go first, right? I mean, if we look at the the whole impulse leg, it was a high time frame move. We look for premium discount, which is the 50% line or higher. Makes sense. There's some liquidity up, above there with the inverse fair value gap manipulation here. So that could be reasonable. I mean, this could also be reasonable right here. There's a S&D. I mean, not quite the 50%, but this might be enough as well, right? You have the S&D with the fair value gap. So we have to see if price wants to come down from there, or if it's gonna hang around here for a little bit longer. All right, so price reacted from there, also reacted from this S&D. So it goes to S&D to S&D, right? S&D to S&D to S&D, fill inefficiency to start trending, right? When it's trending, that's what it's doing. It's filling efficiency and then going for external. When it's ranging, it's typically going from S&D to S&D, S&D, S&D until, and then maybe sweeping one side and then taking another side, right? So that's typically when you start identifying ranges, and you'll have a different type of narrative for ranges, but typically you're looking for trending environments and to determine where price is going next. Ranging environments maybe not so clear, right? So you might want to wait until your narrative is clear again once you have a break in of the range, and then you have your direction again, to look for trades in, right? Okay, so here we failed to make a new low. Failed to make a new low. So whenever we fail to make a new low, typically it means some of these highs are weak, and that price is gonna trade back up to mitigate further, or it's gonna actually just change order flow and maybe start going bullish again, right? Because we did hit a significant point of interest, right? If we're gonna go higher, we could be going higher from here, right? Right? We had a large move up, right? Created this liquidity, relative equal lows, and we came down and swept it. If we're gonna go higher, this would be where we're going higher, right? So we'll have to see if this was enough. If narrative if this was their objective, if this is all it was wanted to do, just come down here, then this is how it would go higher. It would create this zone, it would liquidate and then go higher, right? And then it'll come down here and then go higher. It'll make these zigzags higher if we're gonna go higher. But I don't know if that's the objective. It could be the objective, but it seems more likely that we're gonna head down another leg again. But again, this is what I said, on my stream last night and within my Discord. Um, and we're obviously looking at the replay data now, and price does end up going down. But this is exactly what I said, live on Asia yesterday before it went down. That I was expecting price likely to go down based on what price is showing me, based on its filling of inefficiency, based on market structure, based on what price was actually doing at the time, um, and what is the most likely. Again, you're not married to narrative, right? So your narrative can be wrong. You want price to be aligned with narrative, right? So my narrative can be we're going short, but if price starts going up and up and up and conflicts with my narrative, I have to be willing to accept that. I have to be able to react to that rather than forcing my narrative on the price, right? You wait for price to align with narrative, not the other way around, right? So here we have a 15-minute made a new low, failed to make a new low, and looks like a change in order flow back up. Now, if we're gonna go back up, where's the likely place to go up to, right? We don't want to break this high because that would be, it doesn't really make sense for price to come back up here. If price comes back up here, that's a higher time frame flip, and we're probably gonna take this high, right? This is already a manipulation leg where it took this liquidity. There's no, I mean, it could come up and take this liquidity one more time, but it doesn't seem likely, right? It means we came down here. So, I mean, this is a point of interest, this S&D, right? We didn't fully mitigate that yet. We also have the move origin here. And we also have this high, which I mentioned was a 50% of this leg down, right? So we came back into 50%, right? And 50% might be enough, right? Ranging here, so we're not sure. Okay, so took this high, and let's see if that's enough. I think that could be enough if we come back here, but you don't want it to typically go a lot higher. Otherwise, that's kind of conflicting with our narrative, right? Our narrative is this, it needs to come back to rebalance, fill in efficiency before heading back down to take out these lows, right? In the meantime, it's gonna experience some speed bumps. If it's gonna go higher, it needs to go higher from here. So there are some decision areas or pivot points you can look at that are special, right? So if we price reaches to this SNDR, we find a strong reaction, then that's a bullish indicator that we can be going higher. If we go higher than this, we can be going higher than that, and then our narrative changes where we're probably going for this high, right? Our structure changed. We have liquidity targets. We have bullish market structure. Like those things again dictate our short-term bias, and once we start price showing its hand that it wants to go in that direction, we have to be willing to change our narrative if we absolutely need to. But of course, you need to zoom out. You need to zoom out, right? If you're so zoomed in, oftentimes price will try to trick you, and it'll try to look like it's bullish and try to go against the narrative. And then, but on the higher time frame, it's not, right? Higher time frame here, it's bearish, right? We flipped, right? We came up here, we filled in efficiency, and we're starting to head down, right? So no matter what it does here, like it can be doing a lot of things here, and it can still be, it can just be a trick on a lower time frame and then delivering to our higher time frame narrative. So my higher time narrative is still bearish, even though short term might start conflicting and kind of scare me out of some positions or trades. It's always important to zoom out so that you have a understanding of higher time frame objectives, and then you won't be tricked so easily by price action, and you can just sit on your hand when price action is conflicting, and expect not FOMO in and not make brash decisions, not be tricked, be patient and not be tempted, because your narrative is south. Price can do whatever it wants in the meantime, and once price shows that it's ready to be aligned with your narrative, that's when you look for trades and you sit out when it's not clear, right? So here we have, again, took out this liquidity into point of interest. You got immediate reaction, strong reaction, disrespected the SNDR, disrespected fair value gap. This looks very, very bearish, right? And likely this low is being cooked. Probably if this SNDR gets cooked, I mean, it could tap one more time and see a reaction, or ideally if it breaks, then we know we're heading towards a higher time frame move, right? Which is exactly what happens, right? So totally disrespect the SNDR, right? And we expect this SNDR to be cooked, right? Because our higher time frame narrative is bearish. You expect any sort of S&D zone that's counter trend or counter our narrative just to be speed bumps to trick people, and speed bumps for reactions, but ultimately higher time frame is king. And so lows and highs for support and resistance are meant to get broken, if they are coming in between you and the higher time frame objective. So price came down and took out this higher time frame low. What do we expect after it takes out a higher time frame low? We expect to change in order flow back up to fill in efficiency, or we expect accumulation or range before continuing a trend, or we expect a run, right? So here it looks like price ran, right? So this is a run, and you'll know right away once it starts running. You see sharp move, creates a little zone. Oftentimes these zones are tricky. It gets tricky to enter here. It's risky, right? But this strong push, complete disrespecting this first SNDR. I mean, you, you you just need to click sell anywhere here, and you're immediately in profits, right? So sometimes some trades are narrative based, and other times it's price aligning with narrative, and all. But most of the time it should be entry model plus narrative plus price action is what my requirement is, right? So broke this S&R quite bearish, likely heading into the next point of next area of interest. And this is actually quite bearish now, right? If we're good to go higher, we would have expected a strong reaction from this one, right? Especially given that we left the zone quite far, right? Breaking and disrespecting this, we can see a reaction here, but this might be weak as well, along with these lows. These lows typically can be weak, right? If our higher time frame is bearish, right? We can make something like this, break it, take out these higher time frame lows, start changing order flow up here, and then head down again, right? And this is how price moves. This is how price moves in swings, and the reason why it does that again is to fill inefficiencies before taking out external liquidity. Right, and so let's continue. Right, so price comes into the move origin SNDR, responsible for the large move. We do expect a bounce or reaction from here, right? Almost has to 50% of the move of the zone. All right, and you could have gotten a nice like 20, 30, 40 points there. I think I even did get some trades like that. And this is the end of market replay into current price action, right? So we hit Asia. Asia's just ranging after a large move down into SNDR. You do expect a reaction. Right now, we're not getting a strong reaction. Like this is a tiny reaction based on the amount of move, based on the type of zone this is. So I mean, if this is gonna bring us new highs, you would expect a lot of buying pressure to come in, right? This is a long move down. I think we're gonna go down and liquidate these lows because we're not getting a strong reaction. We got no reaction here, and just because of the velocity of this move, the momentum of this move, it's so strong. And plus, like, what do we take? If we're gonna go higher, right, then we haven't really taken anything, and there's nothing here. Like, there's no reason for us to just go pump higher now. Like a V-shaped recovery, that's not gonna happen, right? If we're gonna go higher, sometimes we would make swings here. We would make swings here. We will take liquidity. We will make inducement. We will take the liquidity and then go higher, and we will start flipping, and there will be a lot more reaction here. But this is a really strong higher time frame move, right? And disrespecting that, and then ultimately my target would be down here to this zone, fair value gaps where we can see reactions. We can see reaction here. We can see reaction off of this S&D zone. And who knows if those are just going to be reactions to take us to new highs. I don't think so. I think we're done going higher. I mean, I could be wrong, knock on wood, but I think price is ready to start heading back down. And then, like I said, I have a super higher time frame target that's going to take weeks and weeks to get to. But in a short time, how is it going to head there? It's going to head there by swinging lower lows, lower highs, lower lows, lower highs, going back into the zone, filling efficiencies, taking out external liquidity, right? And this is narrative building. This is how you read price, right? You're reading price, right, so that you can find um, the highest, what, so you can have expectations of what future price is going to do. Like you can have an idea of where price is reaching for, why is it likely to reach there, right? And that's based on market structure, draws on liquidity, right? Unmitigated zones, SNDRs, right? Objective to objective, SNDR to SNDR to external rates liquidity. You're looking at the order flow, and what makes sense, right? If price is gonna go to a specific target, what is required for it to, what does it need to do before it goes there, right? And it does need to do a few things. It needs to fill in efficiencies. It needs to rebalance its inventory. It needs to take liquidity before it can head there, right? It needs to make it tricky so that retail traders who are all looking at it, can't be a part of the move. They're gonna make it hard for us to get involved, right? But having narrative, understanding the tricks that market makers play, you know, will cause you not to be surprised, right? You're not going to be surprised by market movements, right? Most people who are looking at it, they're going to say it's random, it's manipulation, it's a scam, right? But if you understand how price moves, you can build a narrative and start capitalizing on some of these market movements, right? It's not going to be easy. It's not, it's going to take a long time. It's going to take experience. You're going to need lots of time in the charts to be able to read it, and to understand its price movements. But yeah, once you start doing, it will build your foundation, and you're going to be able to read it like a book, and you're gonna be able to make logical decisions rather than FOMOing in, getting tricked, being tempted. You're gonna be able to find the optimal places to enter and partake in the move. Anyways, hopefully you guys enjoyed this session of narrating price through recent price action. If you guys like this, leave a comment below, share this with your friends, and I'll continue to maybe do more of these in the future. All right, and I think that's it. Yep, thanks for watching, guys, and subscribe if you guys haven't already. All right, take care. Bye bye.